Throughout your career in finance, you're going to be asked to put together several kinds of deal summaries. When you're recruiting for private equity, you're going to have to be able to synthesize what you did on your investment banking deals, who the major players are, and why it's important to a private equity firm. When you're on the job in investment banking, you're going to be asked a lot of the times to create deal summaries about recently announced deals or earnings summaries that catalog everything that's kind of relevant to a particular company. So in this video, we are going to build a simple deal summary, and I think this is going to be useful throughout different stages of your career. Please note that the term deal here is used relatively liberally. It could refer to a merger, an acquisition, an IPO, equity or debt financing, a corporate partnership, and these principles can also be used to summarize earnings calls. So the very first thing you have to do, just like writing an essay, is to determine the purpose of the deal summary. Depending on who you're talking to and the reason why you're giving that summary is going to influence the kind of details that you share. Some deal summaries are going to be 10 to 20 pages long and slot into an investment committee memo. And these are going to have lots of detail, lots of graphs, lots of financials to support what happened. On the other hand, in an interview, you might only be given 2 to 3 minutes in order to cover the entire deal. So you're going to have to pick and choose what is the most relevant, but still be aware of the underlying numbers. The second step is to think about what to include. And I actually think the best thing to do here is to look at precedents. If there is a prior deal summary or an earnings summary or a different case study that has already been done before, then you can just look at that and see what they included. If that doesn't exist, then you can look at the company's investor presentation. Public companies in the US are required to post some kind of filing that describes the nature of the transaction. So you can just go through one of those and see what they include. So when I'm gathering information for this kind of summary, I try to think about it in the following buckets. First, we have business model. Almost always, you're going to want to at least have a medium level understanding of how the company makes money. Then we're going to talk about involved parties. So if it's an M&A, who's on either side of the transaction. We're then going to do deal rationale / investment highlights. This is really where you talk about the strategic thinking as well as why it might be relevant for a private equity firm. And finally, we are going to go over the financial highlights. So let's start with the business model. And I think this is incredibly important, especially in private equity interviews. The ability to describe clearly how a company makes money is such a valuable skill. And really what you want to do is have a very, very clear understanding of how a company makes money, how a dollar flows through the entire company. So I would start by just giving a 1 or 2 sentence explanation about how the company makes money. And you can take this honestly like from the company's website or the 10K or whatever investor presentation you see. Just make sure that it is in plain language. It's not good if you have a lot of marketing language or lots of buzzwords. You want to make sure that you could explain it to someone not in finance and they kind of have an idea of what you're talking about. I would also try to think about the key functions that the company does in the value chain. Are they designing products or are they building the products themselves? Are they involved in manufacturing or the retailing or the shipping? Understanding the exact function that they do is really important and it's something you want to communicate. Next, I'd go over the involved parties, clearly articulating who's involved. This is relatively straightforward. I would definitely mention the buyer, the seller, any new or existing investors, as well as any parent companies, and try to think about other related parties, maybe like the founder or an impacted political group or the country that they operate in. These kind of different facts also give a little bit more context. Now, the next really important step is to talk about the deal rationale and the investment highlights. And I think your goal here is to touch on 2 to 4 main points that can really elegantly describe why this deal happened. If you think about it, a deal really is the result of negotiation. So that means both parties are walking away with some kind of benefit. And you want to be able to explain why the deal happened, the philosophies of both parties, and also have an opinion on whether it was a good deal or not. And the following might be good prompts as you're thinking about this answer, but what did each party get? What was the strategic rationale of both companies? What are some characteristics of the deal process? Was it an auction? Was it proprietary? Was it a negotiated sale? What was the IRR and MOM of the transaction? What were the financing elements, i.e. how much debt was raised on the business or how much cash and stock was used in the transaction? Finally, we are going to talk about the financial metrics of the deal. And I actually think it's really useful if you try to memorize the most important metrics. Now, whenever I'm doing a deal, I try to memorize at a bare minimum the following: enterprise value, revenue growth, EBITDA, as well as the debt multiple if it is applicable. So these are the absolute basics because, that's how most people talk about deals. People are going to think about the multiple applied to a business. People are going to ask how fast the business is growing. After that, I think the level of depth you want to get into really depends on the context. For something like a private equity interview, you'll have to prepare a lot more stuff, like knowing the different divisions and their revenue growths, as well as different cost structures. And if you want help preparing for that kind of deal, you should check out our course on our website. So let's go over an example of a deal summary in the context of a private equity interview. And I just picked a deal at random, but I'm going to pretend like I was a humble investment banking analyst working on Thoma Bravo's acquisition of Calypso back in March 2021. I worked on Thoma Bravo's $3.75 billion acquisition of Calypso technology. So Calypso is a SaaS business that provides risk, trading, and compliance functions specifically for financial institutions. They are a B2B business whose flagship product is known as Bank in a Box, and it really assists with all day-to-day financial matters. For example, Calypso might help with electronic trading, as well as pricing the risk of derivatives, as well as everyday cash flow management. Calypso designs and develops its own software and distributes its software to over 40,000 market professionals. So I was an analyst at Jefferies, and we co-advised Thoma Bravo with Evercore also in the transaction, and my main responsibility was to support the buyer's operating model. Specifically, I was sanitizing different assumptions by going through the data room. One of the responsibilities I had was to go through the headcount forecast of the business and see whether that tied to the EBITDA forecast and whether it was reasonable, as well as see what kind of SG&A improvements could be made. Now, the investment thesis for the transaction underwrote significant EBITDA improvement over the next 5 years. And a lot of this is coming from cost improvements as well as operating leverage in the software platform. And this is very typical for Thoma Bravo's investing playbook. A lot of the times they love to invest in these really high retention rate software businesses, and Calypso's retention rate is one of the best in the industry. So that's how I would go through a deal summary if someone asked me to do it in an interview context. Again, you'll have to be prepared for a lot of follow-up questions that dig into the numbers. So now let's go into a second example. This one is a written deal summary of a private financing. So now we're looking at Splice's Series C funding round. I would classify this probably as a growth equity financing deal. Growth equity typically is in that Series B to Series D range with some flexibility. But what I did here was essentially break it down into investment highlights as well as the business model of Splice. So we're going to start with investment highlights. In March 2019, Splice raised $57.5 million in a Series C round from venture capital firms such as Union Square Ventures and True Ventures. So maybe it's more of a late stage venture capital kind of deal. I noted that USV is an initial investor of Splice back in 2013, and the estimated valuation is $500 million, but that is per Bloomberg. It's worth noting that for private companies, a lot of the time there just won't be information available, and I would just urge you to be cautious of what you do include. I think if it comes from a news article in a major publication, it's fine, but aside from that, I would definitely exercise your judgment. I also mentioned the funding raised to date is $105 million, and then I just do the tagline for the business that you can try to understand in one sentence. Splice is an online platform and marketplace that helps musicians purchase sounds, download instrument presets, and rent digital instruments. Lastly, I would just do other very high-level facts, so how many employees the business has, as well as the geography, and maybe mention a couple of things about the founder, especially if it's a founder-led company. So hopefully that was helpful for you. I do think that the most important deal summaries are going to be the oral and written one, as you're going to face them time and time again in your career. If you are looking for more detailed instruction on how to recruit for private equity, you should definitely check out our course at peakframeworks.com. Thanks for watching, and I'll see you in the next one.